All right, check it out. So I'm gonna back test some RSI trading. Um, gonna go ahead and scroll forward to the charts bar by bar using the RSI, try and find entries, exits, and I'm at a random point here on this random pair, NJ 240, and on this 240 chart, trades will take a lot longer to play out than you see happening here. But it's just for example testing. Let's go. Let's get it going. What I want to look for is my RSI to hit the extreme levels of either 70 or 30. Okay, there we go. Break out into 70. I want to look for some divergence here. Just from my naked eye, I see price rising a bit, but I also see a little decline there. RSI little incline. So that there is bearish hidden divergence. Bearish hidden divergence. Okay, so we have bearish hidden divergence. Now let's see if we can see some bearish regular divergence. Okay, let's get rid of this. This now points up, and we have correlation with price and the RSI. So RSI isn't really saying anything here as far as divergence. Price and RSI match, so that's no good anymore. Scroll forward. We do have some regular bearish divergence starting, and that. Scroll forward a bit more. What we really want to look for is some sort of a double or triple top with divergence. You don't really want to enter on just one single peak. You know, I mean, it happens, but it doesn't happen as often as if you were to wait for a double or a triple top. So let's go. Okay, got to retest, double top, more divergence. Oops, come straight across this top here, and here we see those same 2 points on the RSI, bearish regular divergence. Difference between price and the RSI. Now the key here is to identify a key level, and you do that by, here is your most recent high in price. Here is your most recent high on the RSI. That is also your most recent divergence. What you want to look for is the peak in your RSI before those two most recent parts. That would be here. That would be that peak there. The peak between the two. The peak between the divergence. So, another point there. And you have your high there. And the point in between those 2 points is there. This orange circle. That is your level. That's your key level. You want price. Well, you want to find the corresponding point in price. So you take your arrow straight up, and that is that candlestick bar right there. What you want is for the RSI to go lower or break that level, this level here, You want the RSI to break that level, but at or around the same time, you want price to break and close the same corresponding level to show or complete that there is downward momentum or bearish momentum after the bearish divergence. So we scroll forward. RSI doesn't break. Okay, RSI breaks. But price breaks, but it doesn't close. Price breaks our level, but it doesn't close on our level. So no entry, no close. Okay, there's the push through. There's the push through. Now, to confirm, we want price to retest that level. We want price to retest. Basically, we want price to retest 77,399, 77,400 around. And that would be a break and retest after the bearish divergence, after the bearish momentum, after the bearish move. You want price to come up and retest the level. This corresponding level in the RSI, which would be this black candlestick bar. You want price to come up and retest this black candlestick bar. Entry is anywhere in this candlestick bar. Stop above this swing high. Let's advance forward. Okay, we see on that exact next bar, price retested our level. So our entry would be there. You could enter at the close, but I prefer to put to enter right as price tests that level. Stop, go up here somewhere, wherever you feel comfortable, but above the swing. Take profit. You know, we could set that there somewhere, but really we watch the RSI for our take profit level. Let's just drop this here for now. Actually, let's leave this up here. We're not worrying about our take profit yet. We want to actually get into profit before we even worry about the take profit level. Okay, so we have our top, we have the break of structure, and we have the retest and the entry on the retest. Now let's scroll forward and see what happens. And here we go. RSI is now in oversold, but we're holding because we see no divergence or bullish signal of upward momentum yet. Okay, RSI deep in the oversold, but we are still holding. Okay, RSI turning up, still holding. Okay, here we go. We have a potential double bottom here at that level there. We have a touch and another touch past the body or the close of this first low. For me, I'm still holding because our RSI is still pointing down on that second leg of the W. Okay, even more of a double bottom showing RSI starting to turn up. Even more of a double bottom. No close. We haven't closed below the first swing low. Okay, and there, broke through and closed. Still showing divergence. Still showing bullish divergence. Let's mark this out. We have, let's go another bar. Okay. 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 We have no divergence. No divergence. RSI has made a completely new low, as well as price. So there's correlation. No difference between price and RSI. No divergence. No reason to exit the trade. If we look here, from this point in the RSI, there, slightly up. Corresponding points here to there. That is the start of more bearish momentum building. I'm still holding the trade. Let's scroll forward. Okay, what we're looking for is, we're looking at this point here. Here's the divergence. That peak and that's climbing. Corresponding point here. This candlestick here is our structure level. So we're in the trade until we see that price could be breaking that level there. So I'm not alarmed until price is climbing this high, until I see price coming up here somewhere. I'm not even really alarmed. So you could get a trailing stop, a trailing take profit stop here. Let's get rid of that. So you could trail your profit here because you have this level watching. Let's scroll forward. Continue on. Still in the trade. Okay. We have a double bottom right there. Double bottom. And with that double bottom, divergence. Bullish regular divergence. RSI still pointing down. Still in the trade. Scroll forward. Okay, RSI up. Now just as we did in the earlier trade here, do that all over again, but on this bullish move or potential bullish move. So we identify the divergence, the most recent divergence, which is this move, this down move, up, down for the double bottom. And on the RSI, on our RSI, it's here. On our RSI, it's here. Down, up, divergence. There's the divergence. We locate our peak in between, the divergence. There, we find the corresponding peak or corresponding candlestick bar and price, and that becomes our structure level zone area that we wait for a break. So what we're looking for is a break right there, a break of that candle. We have no break No break and close. Break and close of that level there. Okay? We're up against this structure level. You can choose to exit your trade here. Let's exit the trade there. And that would have got you 288 pips. 288 pips. You could have exited the trade here for 420 pips. So anywhere between 288 to about 420 pips on that H4 divergence trade. Okay, let's say we exited, and we now have our break and close there. Let's see if price will retest. If price will retest here at 74,175. 74,175. Let's put a let's grab this guy. 74,175. Let's see if price will retest that. And if it does, we'll enter and stop. It's down here and take profit. But always watching the RSI. I like to get in at market price. I don't like to use buy limit, sell limit, stuff like that. I like to enter at market. So if we do get a retest, I look at my RSI and I kind of make a judgment call off of that. So let's scroll forward and see if we get the retest. Okay, no retest. No retest. Just went straight up. And we took profit on that. So that was good. Let's see. We might be setting up another move to the downside. RSI is climbing. RSI is climbing. So we have this area here, and the corresponding area on the RSI is here. Now, price has broken that level. I mean, RSI has broken this level here, but it hasn't broken the level on price. RSI made a new high as far as this area here. Price has not made a new high yet as far as this area here, the corresponding area in the RSI. So if we get some kind of bearish divergence signal there, it might be another chance to re-enter short. Okay, we got a break and close here. Now we want to watch for possible another bullish entry. We got some divergence there, divergence here. There's our peak between the nearest divergence. Correspond that to price is there. We're looking for a break and close on that level with a retest. Do we get it? We got the break. Do we get a retest? Okay. Not quite a retest, but possible bearish divergence setting up. Can we get a double top? Can we get a wick on that level there? It wicked. So that was a potential entry. It wicked our level, or it double topped. Stop there. We have divergence. Now we look for our peak. The nearest, between the nearest divergence, which is there, and the corresponding level and price. Okay, but we already entered here. This is confirmation. A break on that level is confirmation, and we broke our level. That's a long wick candle. That's a weird looking candle. That could have been a news event. So that goes to show you that, you know, this technical analysis style works with news. To be honest, I rarely look at news. I just trust the divergences. And that candle that just printed looks like that could have been a news event, but we're already in on the divergence. It was a test. It was a retest of our zone here, corresponding to our peak between the most recent divergence and a retest. It looks like we have another bar retesting the level. Let's see what happens on the next bar. Okay, a break back up. Okay, you could take profit or set. I would most definitely set a stop loss in profit. Coming up for our level again, and we're stopped out in profit. Or if you wanted to, we had gotten in there, could have taken profit anywhere from 80 pips, I'd say, to 140, based on this entry that we took here. And at this moment, you see sort of a triple top building. Nothing's really sticking out to me. Nothing's pointing out to me. You know, if you had put in multiple entries here, if you had put in 2 or 3 entries here, you could still be in the trade from this entry. From this entry here, you could still be running if you had put in multiple entries there. So let's say we took our 280 pips from this move. We took our 100 pips from this move. We're up about 400 pips. About. We're still in this trade with, let's see, our retest was here. We got in. We're still in that trade with 172 pips on position 2, 3, 4, 5, whatever it is. Let's say we cleared out of all other positions and we have one more on our original entry. Let's run the charts forward. And our entry is definitely, let's see, we entered here. At this point, we most definitely have a stop loss in profit. And let's run it. And this is what I like to do. Enter with 2 or 3 positions, take profit on 1, on 2, and leave at least 1 to run on. And you can see how strong this entry level was, because we just got stopped out in profit exactly, and then a drop for 240 pips within the time of one session, about 8 hours. And did we see that setting up on the RSI? I think we did. We have an up move there, the price. We have a down move on the RSI. This would be our most recent peak between the divergence. I'll draw that in. Start here, come down. There's our new high. Start here, down. There's our high. The corresponding point in price is there. Here's our level. And we have a break. Break and close. Break, close, retest. We got in on the retest. In this case, the stop loss would go about there. About there. And the reason I do that is because I'm using that candle. Stop loss above that candle, because that's my peak. That candle corresponds to my peak in between my most recent divergence. So my entry and stop loss is based on that candle. We got a break and close of this candle. Then on the next, we got a retest of this candle. Entry, stop loss. And on the immediate next candle, 56 pips. 20, 30, 40 pips. Drop your stop loss into profit. 2 positions. And stopped in profit on that one. Okay. Let's say we left our stop loss. Let's see what would happen. Okay. Moved our stop into profit a little too early. But the move went down. Stopped in profit. If we didn't do that, that would have been on top of 400 pips, another 284 pips. There we go. A little bit on divergence. Probably super confusing, but watch this video back as many times as you need. Peace.